Alright, welcome back. This is Para. This is gonna be a very simple video on how I determine my daily bias and how I find draws on liquidity for the trading day. This is as simple as it gets. This is using basic ICT concepts and the understanding of OHLC and basic price action. I mean, this you can teach this to a 7-year-old and they will understand this. So let's just get right into this. I'll first show you a couple of examples on charts, and then I'll take you over to FX Replay where I'll show you continuous examples to kind of hurry your understanding of this. So with this strategy, we're using the previous daily candle and looking at where it's closed or where it wicked. In this example right here, we can see we have this daily candle right here with the high and the low marked. And then the previous daily candle closed below it. We had this wick up, and then we closed below the low of the previous day. Now, with this, let's assume that like we wicked all the way down here. Well, we still closed with a body below the low of the previous daily candle. What does this mean? It means that price opened, pushed lower, but still it wasn't bullish enough to close above the previous daily candle's wick, which makes our draw on liquidity the low of the new daily candle that was just created. Now, assuming now let's say the next candle opens like this. Let's make this a green candle. Another example here. If the next daily candle, now another example here, the next daily candle opens, goes all the way down into our draw on liquidity, but we get a wick close, or we don't close below the low of this candle right here. This gives us a more bullish bias for the next thing because we went all the way down here, but we didn't close below the wick of the previous daily candle. Therefore, this signals to us that we have somewhat of a bullish momentum and we can target the high of this daily candle right here. Now, if you go on the charts, I will just show you some examples right here from previous price action, and then I'll move you over to FX Replay to kind of show you live examples on how I personally use this into my trading. Let's start down here. We can see this candle close below this candle wick. What does that give us? Draw on liquidity is lower over here. Again, our draw on liquidity is hit. Next day, we get another close below. Where is our draw on liquidity? Right here. And then we close below this as well. Now, we get a close below this. Where is our draw on liquidity? Here. Now, this does not get hit. Now, this could be because of multiple reasons. We might have an SMT, or lower time frame just looks differently. But let's continue with this. The next daily candle is kind of an inside candle. It's a Monday candle, so here we don't really have much of a bias. But if we do apply this, we can see our draw on liquidity is previous day high. Why? Failed to close below, failed to even take it, which means we're having more of a bullish bias. Whereas our draw on liquidity afterwards, because we close above here, our draw on liquidity is previous day high right there, which gets hit. Now, the next day, we get a wick close above here. We don't close with a body, we close with a wick. Therefore, our draw on liquidity is previous day low, right? Just like that. Now here, again, we get our wick close bullishly. What does that mean? Our draw on liquidity is previous day highs, which we take. Now here, since we do close with a body, as you can see right there, our draw on liquidity is previous day highs, which we take. Now, once again, our draw on liquidity here is previous day high. But remember, this is a Monday, so it's not supposed to be perfect. Our draw on liquidity is going to be here. Next day, Tuesday, expands lower. Doesn't take our draw on liquidity, our initial draw on liquidity. Again, this could be because SMT or many other reasons. Maybe we had news, but we close below this right here. Where's our next draw on liquidity? Down here. We get a wick close. Where's our next draw on liquidity? Up here, which doesn't get hit right away, but we can see here, since we got a body close here, or a wick close, our draw on liquidity would be up here. Now, it doesn't get hit right away because, I mean, this is a big range. Next day, we close with a wick down here. So what can we know based on that? Friday should reach into here, or at least up here or here. Forget that. And then Friday, where does it close? It gives us a body close above here. What is our draw on liquidity for Monday? Up here. Now, this closed with a body above the wick high of this candle. Where's our draw on liquidity? Up here. Next day, once again, we get a wick close Where's our drawn liquidity? Down here. Once again, with close, where's our drawn liquidity? Up here. Gets hit right there, I'm pretty sure. Now obviously I have to zoom in to see if it was hit or not. Even if it's not hit in the next day, which that is still a drawn liquidity just based on this candle close. Next day, body close up there. Where's our drawn liquidity? Up here. And this goes on forever. Now let's go on FX replay and go back in time. I will show you some examples on the daily time frame where we'll just look at how candles close based on this bias, and then we're going to mark out those draws on liquidities and go on the lower time frame to see how price behaves. We're on FX replay now, and I'm going to apply the same logic that I just showed you on charts. We have this big daily candle that just kind of displays lower. We can see the next candle afterwards closed with a wick. The next candle was kind of an inside candle, but our drawn liquidity is still up here. So let's see what happens. You can see that gets hit on Monday. Now the next candle, we close with a body right there. So our drawn liquidity would be here. See how that works? It gets hit. We can close with a body again. Our drawn liquidity will be up here. Now if I go on the lower time frames, nope, this is not hit. So let's stay on the higher time frames. See if that gets hit. That gets hit right there. But let's see how the candle closes. Now the next daily candle, we got another body close up here. So our drawn liquidity would be up here. If we let this run, drawn liquidity is hit. Once again, body close, drawn liquidity is hit. Now here we close with a wick. So our drawn liquidity would be here based on the strategy. But remember, you have to take other factors into this. This is a big candle. I mean, we went all the way down here into previous day's low and into this fair value gap below between these two candles and went back up. So this could be still a bullish day. But if you just want to take this strategy into account, your drawn liquidity would be down here. And as you can see, that gets hit, right, just like that. Now we close with a wick. Drawn liquidity will be up here. That doesn't get hit. We have an inside candle. Our drawn liquidity is still up there. Again, an inside candle. Nothing is happening. We just have to be patient until price decides to give us a bias. And as we can see, our drawn liquidity gets hit with a body close, which marks our next drawn liquidity up here. Now we can see it gets hit instantly. Now on the days that it's where it gets hit instantly before New York, I tend to not trade New York or trade it using a different strategy for bias. But let's see how this candle does. We get a body close, almost a body close, but this is not the highest probable, but I will mark this low right here and this. But if we just want to take this strategy blindly, our drawn liquidity would be up here. As we can see, the low gets hit. Reason for that being, next day was an inside candle, and we just kind of failed to displace up here. So we hit this low over here. Now we can see with this wick close, our drawn liquidity will be up here, which was indeed hit. With this wick close, our drawn liquidity will be down here, which was hit again. Now with this displacement lower and body close, our drawn liquidity will be here, not hit. We take this high, so I'm going to mark this low. That low gets hit, and our initial drawn liquidity also gets hit. Wick close, our drawn liquidity is up here, hit. Up here, we got a body close of this. Our drawn liquidity is up here, and that also gets hit. So you can see how using this to determine your daily bias works really well. Obviously, there are some times where it doesn't work perfectly, but it does give you a clear direction to get in a few intraday trades. That's it for this video. I hope this helped, and I'll see you in the next one.